Hey, what is up you guys? Sean here, and if you've been following my channel, just recently I posted a video about the coronavirus and how it's caused this massive plunge in the stock market, upwards of 30% just within the last month. And in the video we talked about whether or not this really was the golden opportunity to begin investing, to really begin building that wealth. And we also discussed whether or not this really even mattered, if it was really even that big of a deal over the next 10, 20, 30 years. So if you haven't watched that video, make sure you do. I give a lot of perspective and insight onto how to go about navigating and thinking about this crazy economic shift that's going on right now due to this virus, and whether or not you can really capitalize on a time like this. So I have a video to that with a link in the description box below. Make sure you check that out. If you haven't been following my channel, make sure you smash that like button, subscribe, hit that notification bell. What I do is I talk a lot about personal finance, how to begin saving money, how to make more money through entrepreneurship, how to begin investing, creating wealth, passive income, living life on your terms. So if you're into those types of things, this channel's for you. So smash that like button, hit the subscribe, hit the little notification bell. And today what we're going to be talking about is, look, what do we do next? Because when I posted that video, what I didn't realize was that even more people started reaching out to me, friends and families and clients, and even people I didn't know, sending me emails like, hey Sean, I watched your video, I thought it was fantastic, I've determined that I want to invest in the market, I just don't really know what's the best way of going about it. So that's what I want to share today. How do we go from the decision of, I want to invest, to actually making a game plan and a strategy for investing so that we maximize our returns and we do the best strategy to make sure that we are doing what's most financially advantageous for us. So let's jump into it. The very first thing that you're going to want to do is you're going to want to determine how much money you are willing to invest. Now, I tell this regardless of whether or not this crazy shift or the coronavirus is happening, but make sure that you have some bit of savings behind you before you begin investing, because look, here's the deal. Especially in a time like this, we don't know what's going to happen with a lot of jobs. We don't know what's going to happen with the economy. And we want to make sure that in the event that we cannot work, or we're not working or making money, that we have a little bit to float on. I myself have some friends who have lost upwards of 2 months worth of booked work because they're like contract workers, they do events and things like that, and everything is getting shut down. So they're freaking out because they don't have income anymore for the next 2 months. They got to figure something out. And if you don't have a stockpile of savings behind you or a contingency plan in these instances, it can really be a scary time. And if that's the case for you, if you can't go one paycheck without working, then I would say don't worry about investing yet. Just stockpile a little bit of money just in case for worst case scenarios. But if you have somebody behind you and you're like, hey, even if I were to not work for a few weeks due to a complete lockdown or shutdown or whatever ends up happening, I'm still okay. Then determine how much money that you're willing to invest, and not just invest for the short term. If you follow me in my videos and my philosophies, I'm not about just buy low and sell high and like, oh, I bought 1 month and 2 months it went up, so I'm going to sell it. I'm about buy low, hold long term, and continue to keep buying when it's lower. So this is going to be money that you're going to invest for the next 10, 20, 30 years. So make sure it's money that you're okay with putting aside for a little bit to really begin building massive wealth for yourself. But once you've determined how much money you're willing to invest, the next thing is you got to determine, which is step 2, determine your investment vehicle or strategy per se. Now, there's a lot of different options you have with investing in the stock market, but I really tell people, look, you really have 2 main options in my opinion. Number 1 is you're going to invest in the stocks, an individual company stock, or invest in an index fund, okay? So, which one's better? I'm not really going to go into all that. Honestly, either investment's really great. They both have advantages and disadvantages to them. I personally like index funds a little bit more, but that's not to say that you can't do really, really well in individual stocks. There are people who make great money just investing in individual stocks. So it's going to partially come down to preference, pros and cons, what you want. But here's what to look for. If you're going to invest in an individual company stock, I would say by far, make sure that you're investing in a company that is very established and that you know is going to be around for the next couple decades. Because like I said, we're not trying to just buy today and hopefully sell next week for a profit. we're gonna buy today and continue to buy over the next 10, 20, 30 years. So I would probably stay away from a company that's like brand new, that you haven't really heard anything about, but everybody's like, oh, this could really be a big deal. It's like, don't try to get rich quick, get rich for sure. Okay, so buy a individual stock from a company that you like their products, you use their products, maybe you really like what they're about, you like their motto, you like what they stand for, and it's a company that's very strong, it's been around for a while, and will continue to be around for the next couple decades. So do that. Now, or the other option is an index fund. So instead of investing in just one single company, you're investing in either basically a group of companies, or you're tracking an overall market like the S&P 500 or like the total money market or something like that. If you're going to invest in an index fund, then I would say by far make sure that you invest in one that has a very, very low expense ratio. All right, I'm not going to get into all the details about that. That's a completely different video, but make sure it has one of the lowest expense ratios that you can find, and make sure that it has a track record and a good one. Okay, so like the S&P 500, the history of it has averaged close to 10% since the inception of it. That's pretty good. I talk about in that previous video that I mentioned earlier about 10% can be massive. I mean, I was talking with a client how the 10% over 40 years, $400 a month, that could be like well over $2.5 million in his account. Maybe even upwards like $3 million. I can't remember for sure now, but it was a massive amount at just 10%. So find an index fund that has low expense ratios and has a good track record. Now, once you've determined your investment vehicle, the next thing you want to do is you're going to determine the timing at which you do this. Now, this is where I think this video is going to get really great, and I'm really excited to share this knowledge to you. When you're getting ready to invest, you have different strategies and different timings you can do. So let's talk about that. Your one option is you can just take the money that you have and say, look, the market went down by 20%, 30%, wherever it's at when you're watching this video, and you say, look, it's at a discount, I'm gonna take all my money, I'm just gonna buy it now because I know that over the next 10, 20, 30, 40 years that it's going to go back up and it's going to continue to go even more than what it was before all this craziness happened. And yes, that's true. So you say, you know what, just put it all in, we're gonna go all in, we're gonna do that. But there is a chance that because we're in the infancy of this whole thing and who knows what's gonna happen over the next couple weeks, couple months, we could take a little more of a nosedive in the economy. There's a potential huge financial crisis that could be happening right now, and even though the market's maybe down 20%, it could go down another 20, 30%. And so if you invest right now and it does take another massive nosedive, that's money that you've missed out on that you could have also earned if you just waited a little bit longer. So maybe one of your strategies is let's wait a little bit and see kind of how the market's going to play out a little bit. So maybe you're going to wait a few weeks, maybe wait a month and see, is this economy going to continue to nosedive? Is it going to kind of stable out, or is it just going to, in the next few days or week, just kind of turn back around and start skyrocketing back up? So that other strategy is let's wait a little bit, let's kind of get a better sense of what's going on, and if it does take a nosedive, then I'm going all in. But there is a third option, and in my opinion, this might be probably the best option for you, and that is what's called dollar cost averaging. Now, if you haven't heard dollar cost averaging, it's basically an investment strategy or method to where you try to minimize the amount of volatility. Now, especially in times like these where we just have no idea what's going to go on, but you want to potentially take advantage of this opportunity, this is a really good example and a really good way of doing this. What you do is instead of going all in now or waiting a little bit and going all in then, you're saying, hey, this market's probably going to be going up some. 1 week it's gone up, and then the next week it's plunged. Then in the next week it goes up really high, then it kind of goes down a little bit, then up a little bit. It's all over the place. So you say instead of trying to just time it and go all in, what I'm going to do is I'm going to take the money I'm going to invest and spread it out over time and invest increments. So maybe you invest part of it today while it's down 20%. But then in a week, it plunges even more, 20%, and so you invest a little bit more. So you've actually capitalized a little bit on the even further decrease. But then, the market kind of nosedives up a little, goes up a little bit, and then you invest a little bit then. What you're doing is you're minimizing volatility. So this is a really, really great way of trying to minimize volatility, and in my opinion, a great way of trying to maximize gains. Instead of focusing on timing the market, you're really just playing time in the market, which if you watch my videos, I talk about all the time, time in the market is where wealth is built. It's not because you bought today and it jumped up a little bit and you sold. It's that you've spent the next 10, 20, 30, 40, maybe even 50 years, depending how old you are, investing just small amounts consistently, getting modest returns. But over those decades, it skyrockets into massive wealth. I can promise you, you're going to do better off long term that way. So maybe look into doing dollar cost averaging, but that is my advice to you. Determine how much you're wanting to invest, how much you can invest. Determine the investment vehicle, individual stock, index fund. And then determine, are you going to go all in now? Or are you going to wait a little bit, see how it goes, then go all in? Or are you going to do dollar cost averaging? But that's my advice. I hope you enjoyed this video. I hope it gave you some great insight. If it did, if you haven't yet, please smash that like button for me. It means the world to me. Leave some comments below. If you have any questions regarding this, leave some comments below. I'm more than happy to answer them. Also, if you haven't yet, hit subscribe, hit that little notification bell for more investment videos, how to build wealth, how to make more money through entrepreneurship, how to save money, all these great things, how to build life on your terms. That's what my channel is about. So if you're into those things, this channel is for you. But before we leave, I just want to say I'm wishing you the utmost success, and above all else, stay healthy and stay safe, okay? Finances are great. It's great to make a lot of money in times like this. However, the money is useless if you have severe health problems. People who are on their deathbed, they're not necessarily that worried anymore about how much money they're gonna make. They're just trying to figure out, can I survive? Can I get better? Or if I can't get better, how do I spend the last moments of my life with those I truly care about and with what I do truly care about? So don't lose sight of that. So stay safe, stay healthy in this absolutely crazy time right now. Try to make the best financial moves that you can. If you've lost a lot of money right now, the stock market's already taken a tank and you've lost a lot, don't panic, don't freak out. Listen, long term, over the next 10, 20, 30 years, you're not even gonna notice it. The market will turn back around at some point. I don't know when, but it will turn back. You'll get your money back and you'll continue to make more. So don't freak out, don't panic and go into a sell frenzy and losing half, 30% of all the money that you've had. But stay safe. I wish you the best in your journey. Leave comments below, hit that subscribe button, and we'll see you then.